While it's exciting to start thinking about moving in and decorating after you've applied for a mortgage, there are some key things to keep in mind in the meantime before you officially close escrow. Here's a list of 6 don'ts to look out for when applying for a home loan. First, don't deposit large sums of cash. Lenders need to be able to source your money, and cash isn't easily traceable. So before you deposit any amount of cash into your accounts, discuss the proper way to document your transaction with your loan officer. Second, don't finance any large purchases. It's not just home-related purchases that could disqualify you from your loan. Any large purchases can be red flags to lenders. Taking on additional debt will increase your debt-to-income ratio, which compares your monthly debt payments with your monthly income. And since higher ratios could show as a riskier loan to a lender, borrowers may no longer qualify for their mortgage. So resist the temptation to finance any large purchases before closing, even for furniture or appliances, if at all possible. Third, don't co-sign loans. When you co-sign for someone else's loan, you are assuming responsibility in that loan's success and repayment if anything happens to the borrower. With that obligation comes a higher debt-to-income ratio. So even if you aren't planning on making any of the payments, your lender will still count those payments against you. Fourth, don't switch bank accounts. Lenders need to be able to source and track your assets. That task is so much easier when there's consistency among your accounts. Before you transfer any money, speak with your loan officer first. Fifth, don't apply for new credit. It doesn't matter if it's a new credit card or a new car. When you have your credit report run in multiple financial channels like a mortgage, credit card, auto, etc., it will impact your credit score. Lower credit scores could lead to a higher interest rate and potentially even lead you to losing your eligibility for loan approval. Sixth, don't close any accounts. Many buyers believe that having less available credit makes them less risky and more likely to be approved. But this isn't necessarily true. A major component of your credit score is your length and depth of credit history, as opposed to just your payment history, and your total usage of credit as a percentage of available credit. Closing accounts has a negative impact on both of those aspects of your score. Now, you may have noticed a common theme throughout this video. If any financial decision comes up while you're applying for a mortgage, or even after you've been approved but you haven't closed on the property quite yet, talk to your loan officer before moving forward. Be upfront about any changes that occur or that you're expecting to occur when talking to your loan officer. Changes in income, employment, or assets should be reviewed and executed in a way that gives your home loan the best chances of being approved. Ultimately, it's best to fully disclose and discuss your intentions with your loan officer before you do anything financial in nature. You want your home purchases to go as smoothly as possible, so remember, before you make any large purchases, move your money around, or make any major life changes, be sure to consult your loan officer, someone who is qualified to explain how your financial decision may impact your home loan.